What's up, good people? How you doing? Hey, welcome back to Stock Up with Larry Jones. You guys know, go ahead and hit the like, the subscribe, and the notification bell. I have a couple of friends with me today. These gentlemen are analysts, and we're just going to bring them right on. We're going to get right into it. We have a lot to talk about the overall market, so we won't be, this is not one of those where you just give stock and we're going to be charting the stock. No, we have a lot to talk about that's going to affect all charts, right? That's going to affect all stocks and all crypto. So let me just bring these gentlemen right in right now. Hey, let's show some love for Stocks with Josh and my man Stock Curry. Let's get some coffee cups going in the house. Let's get some
Hey
coffee cups.
guys, hey Stock Curry, how you doing, man?
Great, Josh. Great, Larry. Thank you so much for having us on today. This is incredible to get the three of us together finally.
Yes, it's been a journey, man. But we're all extremely busy, and I had to make time for this because it is, I believe, it's much needed. Now, for those of you that will ask, I want you to know that no, this will not replace Stockmo and Keenan Grace. This is just something that's been coming together for a long time that I want to bring you guys all of the resources that I can to help you in your trading journey. But first, you guys know right now at the top of this video, make sure you hit the like button. All right? Let's see where we at right now coming out of the gate. Okay. Oh yeah, we got to get this up, good people. We got to get this up. All right, we got to get this up. Let's get these up. All right, so let's get right into it. Stock Curry, I want you to introduce yourself to the good people, and then after Stock Curry, Stocks with Josh, introduce yourself.
Thank you, Larry, so much for having me on. For those of you guys who don't know me, I'm a former investment banker. I used to work for Merrill Lynch and Morgan Stanley. I also used to run a mortgage brokerage company prior to that. Got quite a bit of experience in the industry, and now I just show everybody my trading on YouTube as well as my private Discord. And I'm here to help out as many people as possible to help everybody weather this incredible storm that we're going through right now.
All right, Josh.
Well, I don't think I've ever actually shared my background or experience with anybody, Larry, since I've been on YouTube. I'm a businessman. I own a business that serves the Midwest as well as a business in Southern California. I've been doing that for about 20 years. But in addition to that, Larry and I have been longstanding friends and have been trading and sharing investment ideas and meeting on a weekly and sometimes bi-weekly basis to talk
Yep.
stocks and crypto. And that's poured into some of our other friendships. And eventually it's poured into me being here on YouTube and sharing some of those same things with you guys.
That's cool. That's cool. Hey, so listen, let's get right into it. I want to talk about the housing market, right? And then I want to talk about the jobs market just before we went on. And these are going to affect the overall economy and your stock, believe it or not. Stock Curry and myself, oddly enough, was researching the same thing this weekend. And you know what? Let the people know what you did in the housing market. And you go ahead and open up the housing market, and then we'll go into the jobs from there, okay? And then we'll go into the other thing we talked about.
Okay, sure. Yeah, we'll save the big one for last. So we'll start with the housing market. When I was a mortgage broker, just everybody in that time period, 2005, 2006, it was all subprime mortgages. I mean, that's what we did. That's what we made the most amount of money on. And since literally anybody or anybody's dog could get a mortgage, they were just handing them out like candy. And obviously that caused the major financial collapse in 2008, 9, 10. Now, a lot of the issues that we saw back in that time period with the subprime mortgages, a lot of the fraud, a lot of the no docs, stated lockdowns. I mean, literally, you come into a mortgage brokerage office and you say, "Hey, I want to get a house," and it's like, "Okay, well, you need such and such money to qualify," and there's no proof of income. There was nothing. You just literally stated whatever you wanted to, and you get a house. And of course, the other problem was people were leveraged. They were borrowing 97% of the house value. So when the home prices dropped by just 3% or more, they were already underwater. And at that point, they just stopped paying. And then the other problem we had was something called an ARM, or an adjustable rate mortgage, where you'd be locked into a rate for about 3 years. And then every year thereafter, it would just adjust. And if that intro rate is always really, really small in order to kind of entice you in, and then the actual adjustments thereafter are much higher. So what ended up happening is obviously everything collapsed, right? And then on top of that, the person that actually writes the loan and actually gives you a loan, they are in the business of giving you a loan. That's how they make their money. They don't want to hold on to it. They don't want to service it. So what they do is usually about a month to 2 months after you get your loan, they're going to go sell that to another company that's actually going to hold on to it and collect the payments. So if you ever bought a house, usually 2 or 3 months after you buy the house, you get a letter in the mail saying, "Hey, you need to send your payments to a different company now." And that's because your loan got sold. Now, that's kind of all that happened. Now, the loans that don't sell, they end up in this bucket, and the bucket is called a CDO, or collateralized debt obligation. And you can look at the CDO market to kind of determine how many of these bad loans that nobody wants are out there. And in 2008, that market was $367 million. Today, the market's only $168 million, or less than half of what it was in 2008. On top of that, today we have no subprime mortgages. We have no stated doc loans. We have no doc loans, also called ninja loans. We don't have any of it. So we are in a far, far better place in the housing market today than we were in 2008. In a worst case scenario, if the entire economy were to collapse, the housing market is only going to fall by half of what it did in 2008.
In
so
the worst
all of
case.
That's really, really good news.
Mm-hmm.
Right. Now, there are signs that it's getting worse. The CDO market has risen. There was also something called synthetic CDOs, which essentially you can think of them like options. There was like an option on a CDO, so you could bet on the CDO going up or down. But then there was a problem of you could also take a bet on the option, and then you could take a bet on the option of the option, and then you could take a bet on the option of the option of the option. And before you knew it, some of these companies were leveraged 100 to 1 on a mortgage. And well, we all know what happens when you leverage 100 to 1. Just look at Three Arrows Capital, which we'll get to in a minute when we talk about crypto. You know, they went bankrupt. They ended up wiping out Voyager Digital. It's terrible. You can't be leveraged that much. And so the companies were. And even though the mortgages, only 15% of mortgages defaulted, that equated to about $60 billion. The banks actually lost $600 billion, even though the actual losses in the mortgages were only $60 billion. And it's because of leverage. So this is the main thing we got to watch out for. And for over 10 years, there was not a single synthetic CDO in the United States. And then in January of 2020, about 2.5 years ago, the very first synthetic CDO in 10 years was issued and sold. And today, the synthetic CDO market is booming. Already in the past year, the CDO market has more than tripled. And those ARMs, those adjustable rate mortgages, they're a little bit safer today. They have a 5-1, meaning you're locked in for 5 years instead of 3 before your rate starts to adjust. But for the last 11 years, the ARM market was no more than 4% of the total mortgages that were being done. And the dollar amount on the ARMs was no more than 9% of the total dollars. But starting in January of 2022, literally in the last 6 months, now actually the first 4 months of the year, because the last month we have data for is April, from January through April, the number of ARMs being issued more than doubled. the number went from 4% to 9%, and the dollar amount went from 9% of the overall mortgage market to 17% of the overall mortgage market. Still significantly less than the 47.5% number of arms that we had in 2008. But it all goes to show that for 10 years, we were completely risk off and super safe in the mortgage industry. And now, over the past 2.5 years, risk is back and these crazy loans are back. And this is going to cause a major, major problem in the housing market, but not for another 5 years or so. So for the time being, we're pretty safe.
Exactly. So now, people, we have to understand that this affects. I'm putting these gentlemen links in. So this does affect it actually affects your stocks, which affects your crypto, because job loss and the housing markets are two indicators of a recession. Also, they get affected in the recession, and there is job loss, and the mortgage industry is usually in trouble. Okay. Whether it's commercial real estate, whether you're into REITs, which took a bloodbath in 2008, or residential, okay? But we were also talking about what's happening in the auto industry, which is really quiet right now, but is huge. You know what, Curry? Go right into that.
Sure. So in the auto industry, here's the crazy thing is everybody wants to look at the housing market to determine whether or not we might enter another bad recession. And one quick look at the housing market, you know that it's significantly better off than it was in 2008. Absolutely. So a lot of people look at that and they say, okay, well, the housing market's fine. We're not going to get another major recession like 2008. And they stop right there. The problem is there's a whole nother market with a brewing storm. And believe it or not, this market is twice as large as the subprime mortgage market was in 2008. Now, while subprime mortgages disappeared in 2008, in 2010, subprime mortgages came back in a large way in the auto industry market. And from 2010 through 2022, for the last 12 years, subprime mortgages have been running rampant. To give you an idea how stupid easy it is to get an auto loan, I actually went to a couple of auto dealers and I said, hey, running a business, I have no W-2s, no proof of income. How can I get an auto loan? And they said, oh, no problem. So long as your income is halfway decent, or so long as your credit score is halfway decent, you just tell us how much you make and we'll get you the loan. I was like, well, don't you need to verify it? They're like, no. I said, well, you know, they're going to look at like income tax returns or bank statements or something. Like, no. I said, what if I had a job? Would they look at W-2s or anything? No. The only time they even check is if you have a really, really low credit score, like under 600. Then they might ask for maybe like 3 months of bank statements or maybe 2 pay stubs. But outside of that, they're not even checking. So literally all the problems with these subprime mortgages and stated doc loans and no income verification, all this stuff we had in the mortgage market that destroyed the economy in 2008, it is alive and well in the auto industry.
Exactly.
Now, here's the question is, well, how big is it? How big of a problem is this? Well, you heard of CDOs in the mortgage market, and you may not know what those are, but remember, the CDOs are the worst of the worst, the loans that don't sell. And while the CDO mortgage market might be half of where it was in 2008, the CLO, which is the same thing as a CDO in mortgages, it's just collateralized loan obligation. That's what we call it when we're talking about auto loans. The CLO market is twice as large as the CDO market was in 2008. In 2008, the CDO market maxed out at $367 million. Today, the CLO market on auto loans is over $600 billion. And if you include all CLOs, which include not only auto loans, but also consumer credit cards and commercial loans, that market is well over $1 trillion. So altogether, the CLO market is 3 times larger than the CDO market was in 2008. And
Yep.
the CDO market in 2008 completely wiped out the banking system.
Yeah.
What is going to happen if auto loans start going into default? If we start getting a lot of repossessions in that, and
Well,
that market is
repos
3 times larger than it was in 2008. And
repos are
yes,
going up
you think
now.
there's synthetic. Right, that's right.
Yes.
And you think there's synthetic CDOs that caused 100-to-1 leverage and all these options that wiped out the banks. Guess what? Same thing's happening in the CLO market. There are synthetic CLOs, and it's causing people to be highly leveraged, up to 100 times leverage on these auto loans. And when they start going into default, the banks are going to get completely wiped out.
Crushed.
And Larry, why don't you tell the good people what's happening in the auto loan industry right now?
Well, I'll tell you that in the auto loan industry, repos are up. And not just repos are up. The cars that were purchased since COVID are the ones that are getting repoed at the highest rate, right? So people took all of this money, this extra money that they had, and they just started buying cars and getting into car loans that they couldn't afford. You know, if your car loan is a quarter of what you make, then that car loan is too high. If your car loan is half of what you make, that is insanity. So you have to understand that these are the same banks. This is the same financial system that loan money out for homes. They also loan money out for cars. When a bank gets money, it is not an asset to them. It's a liability. So what they do is they loan it out so your money can make money. That's how banks work. They loan it out through houses, cars, businesses. So that's how banks make their money. And if that money is not making money, then it's just a liability to them. There's not a vault in the back with everybody's money. No, it's out in the system working for them, just like your money should be working for you while we're investing, right? So let's get into where we see where the stock market is going. And then we're going to touch on crypto. And because I know people want to know what's going on with my stocks. Could you guys shine a light on what you see? Remember, anything we say is not a suggestion for you to buy, hold, or sell stocks or crypto. But before we go any further, I just want to say that there is 1,267 people watching right now, and we only have 500 likes. Come on, good people. Come on, let's get it up. Let's get it up. All right. So, hey, also, too, I'm going to say this about 3 times. In my links below, right, I have the Moomoo link and I have the Webull link. If you have one, download the other. If you don't have any, download them both. But under those 2 links, I have links to these 2 gentlemen's pages. I watch both of these gentlemen just like I'll watch Stock Mo and Keenan Grace. I learn a lot from these gentlemen. I watch them. I mean, sometimes, hey, Josh, one time I heard Curry say, I did a triple split reverse dismount spread option. And I was like, what? You did a what? And I'm like, triple split. So, hey, I just want to say their links to their pages is in my description, okay? Click it right now. Well, click it right now if you want to, and subscribe to their page. But come back to this live because we want to give you guys some good information. Okay, so I want you guys to subscribe to these gentlemen pages. Okay, see, it doesn't take anything away from me. It adds to me if I keep bringing people that's going to help you guys in your trading journey. Okay, so you know what? Let's talk about the overall market, right? One of the things I like about these 2 gentlemen is we don't all agree, right? And so this is what I like. I like it when we don't agree because it gets us to see things from another view. So I'm going to start out and say where I think this market is going. And then Josh, I want you to come behind me and say where you think it's going, and then Curry, you come. All right. So we're all unbiased. Remember, I'm speaking for Larry, not for Josh and Curry. Okay. Here's what I see. You guys that's been following me, you already know I've been consistent with it. I see inflation high this year, just high, until I don't see inflation cooling off really at a noticeable rate until fall, right? And that's what I see. I don't really see the market coming green until the last 2 months of the year. I've been consistent about that, saying the fourth quarter, because we have to have inflation to peak, and then we have to have a period of time for the numbers to even come out. So that's what I see. I believe that we'll have a decent October, November, December, maybe the 2 weeks in October, November, December-ish. You know, anything could happen with the geopolitical situation, with gas and everything like that, okay? But that's what I see, right? Now, I know a lot of analysts have been saying that the hard recession will come. I think we're already in a recession, but analysts have been saying Q2 of next year. I think that happens in, they've been saying the second half of next year. I think it's going to happen in the first half of next year now, because things keep changing and we have to monitor it. So that's what I see for the overall market. It's not written in the stone. It's a guesstimation based on the data that I see. All right. Josh Nichols, what do you think?
Well, that was good,
Unbiased.
Larry. I think that we can have a lot of economic, trouble in the economy and the economy continues to go up. So I think if we looked just at all of the problems, it's not necessarily a guarantee that that would slow this economy down or keep us from even going back to make new highs. It doesn't have to be logical. I mean, there's that old saying that says that the market can remain illogical longer than you can remain solvent. And so, when I look at the markets right now, I mean, I'm seeing a bunch of different indicators that don't all agree. We saw in this last couple weeks, we saw oil roll over and come down.
Yep.
I've been wondering whether it's kind of trying to fake us out, because that would be a very positive indicator going forward if it
came down
continued to
again
go
today.
down.
It came down again.
Yes.
Yep.
Yes. And it was up against resistance, and it failed. So there's pretty good technical signs that it may continue in a downward trend. It's not the only thing that we can look at. Volatility is also down, which of course can open up some optimistic view of the market. I'm risk off, and I'm not of the mind frame where I'm going in heavy on anything, because I see the opportunity for a lot of setups technically to go higher. There's a lot of companies like Apple, a lot of them that look like they want to go higher. You know that I've been investing in Alibaba. It pulled back to a place where I'm interested in beginning to nibble. And a lot of these companies look like they want to go higher, but I don't think, and the volume that we've been getting in the S&P has been light. I think we went from 12 billion in daily volume. We've pulled back to 9 billion. So there's no conviction in the market right now. I did want to make a brief comment about something stock that you said, Stock Curry, that just made me giggle a little bit when you were saying a really bad credit score of 600. And I was I was thinking back on some employees of mine that were working really hard and came to me one day and said, "Man, Josh, I got my credit score up above 600."
I was thinking the same thing.
I was so proud of him, and I'm like, oh, there's like at least 100 people that gulped when he said that.
when he said that 600, I thank God I'm all eights now, but that was a lot of work. But I just remember I had a party when I got to 600.
I bet there were some folks that were like, "Oh crap," but I get it.
Yep.
Yeah, no, I mean, I think that there's different signals that are saying different things. Cash is still strong. We would love to see the dollar begin to come down. That would kind of give us the view that the markets could go higher. But oil down, cash down, then that would be pretty cool. But right now, we don't have everything we want technically for these markets.
Yep. Hey,
Yeah, when I
what do
look
you?
at the stock, sure. So when I look at the stock market, I'm seeing there's a lot of factors that are going to play into this. And I think right now the stock market is just reacting to the economy. If we look at all the factors, I think there's really strong evidence for the stock market to bottom out in October and go up in November and December. Uh, Part of that reason is when we look at inflation, it's a year over year inflation number that everybody looks at. And when you get comps against very high inflation, keep in mind the inflation really started going up in October of last year. So come October of this year, we're going to be comping against some pretty high inflation from last year,
Could you hold on
which
one
just
second?
naturally.
Could you hold on one second? Hey, Josh, could you mute while he's talking? Let me see something. Go ahead, Curry.
All right, did that get rid of the echo?
Yep.
All right. So one of the things that we've noticed is that if we are going up against a higher inflation comp from last year, in order to maintain 9% inflation, I mean, you got to be 9% on top of the 6% from last year. And that's going to be really, really hard to do. Even during the 1970s, when we started comping against higher inflation, the actual year over year inflation went down. And so I think what's going to happen is kid October, the actual year over year inflation is going to start going down. And the Fed is going to say, oh, look, we did it. We got inflation down. In reality, it had nothing to do with the Fed. And it's just going to end up being the fact that we're comping against previous high inflation. Regardless, I think the stock market's going to like that. And I think the stock market's going to start going up in October, November, December, and well into Q1 and Q2 of next year. Now, that's going to cause inflation to be low for 6, 9 months, maybe 12 months. And then eventually we're going to start comping against that low inflation, and then we'll see inflation rise again in 2024. So that's what I think is going to happen. I think we continue dropping through October, and then we rise in November and December. You combine that with the fact that historically during a mid-year election cycle like we're in right now, a midterm election cycle, that historically in midterm election cycles, the market will drop through October, it will flatten out in October, and then it will rise in November and December. So history backs it up, the inflation backs it up, and then the third thing that backs that up is the Fed's overnight reverse repo market. And basically what that is there's a lot of these money market funds that have way too much cash on hand. They literally have no place to put it. They have to put it into safe investments, but there's literally not enough treasuries that they can buy in order to put their cash somewhere. Well, in October is when the debt ceiling will get raised again. And when the debt ceiling gets raised, the treasury is going to be able to issue more treasury bonds. And so all of the money that the money markets are holding, they're going to be able to go buy those treasury bonds. And that is going to significantly lower the overnight reverse repos that are happening with the Fed. Now, you don't need to know what all that means. Just know that that means the stock market goes up. Yep. So we got the Fed overnight reverse repo pointing to the market going up in October, November, December. We've got history pointing to that. We've got inflation pointing to that. I think there's really, really strong indicators for that. But I think longer term, as we start looking the next 2-3 years, I think what's going to happen, we're going to go through the cycle like we went through in the 1970s. From 1968 to 1982, that 14-year period, the economy went through these wild swings of high inflation, recession, back to inflation, back to recession, up and down. I mean, it was a 14-year period with 3 recessions before we finally got inflation under control. And I think it's just going to be this constant fight where the Fed raises interest rates to lower inflation. It puts us into a recession. They lower interest rates to get us out of the recession, and that raises inflation. And then they go back to raising interest rates. We go into another recession. We just do it over and over again. And the end of it will not come until Congress, the Senate, the president, the Fed is willing to literally destroy the economy short term in order to knock out inflation once and for all. Paul Volcker did it in 1982 with 20% inflation or 20% interest rates. It caused a massive recession in the United States, but 6 months later, inflation was over. And that's what it takes.
Right.
So it doesn't have to be massive interest rates. The Congress and Senate and president, they can do it with fiscal policy, but that would require Democrats and Republicans to work together. And I don't personally see that happening anytime soon. So I think we are in for a very long period of a very long bearish market for many, many years. That said, even during the 1970s, we had periods of these 1 and 2 year massive bull runs. So we'll hit some massive bull runs in between, but yes. I don't think we're getting back to all-time highs until somebody steps in and does something major. And I mean, in 1968, we didn't officially bottom out till 1982. It took 14 years. Now, it doesn't have to take 14 years this time. It just has to take the government stepping in and do something drastic. As soon as they do, we'll bottom out.
I believe the government will step in this time because they have to for elections, for votes. Let's just face it.
Okay. Let me ask you guys, let's explore this for a minute. What would it take to get this market to bottom out again? Right now, let's say oil, which was a really big deal, it's rolled over. It's come down. And I think we all believe that we're not going to see peak inflation with the numbers that are coming out Wednesday. Mm-hmm. The inflation is likely to be higher. And so we're not going to see that until the next couple months. But do you think that's enough to cause the markets to bottom out right now, to go back to and below their lows?
Nope. Say who you're asking a question to.
Well, either one of you, I apologize. I mean, I'll just share my opinion. I guess here's what I'm at. I'm looking in my mind, what would it take to get us back to those bottoms? Is it on the table? It seems as if the market digested a lot of bad news. All right. We went down, made that low. And now we are on the potential turn of looking forward to some better news. So let's say that in 2 months from now, we are able to see that inflation has lowered, and we could speculate that we had peak inflation behind us. I'm going to start off and ask either one of you if you think that's possible. Do you think that in the next 2 months that the inflation numbers could begin to drop?
Want me to start off, or you know what? You go ahead, Curry.
I don't think we hit a macro bottom until we get into a recession and the Fed starts quantitative easing and the government does something to fix the economy with fiscal policy. Until that happens, I just don't see us bottoming out. There's still a lot of risk.
He said he was going to tighten and he was going to begin to ease in pull in July, but he didn't. What were they saying? $50 billion a week or in July, and that never happened.
Right. That did not happen. The Fed lied.
So if I'm understanding what you said correctly, you're not seeing the major event right now that could cause us to bottom out, unless they were to take the whole problem with inflation more seriously. But there may be a greater concern about pushing us into a recession, and so they just might not do that. I think that they are going to come out this Wednesday with a 75 basis point and believe that that's going to project enough hawkishness to satisfy some people. I think I already saw it the last time they did 75 basis points. There was a ton of analysts that were mad. They wanted him to maybe do a full point, or even complain that his language was too flexible. They wanted him to stand a certain way. I think he's been dovish. I don't think the 75 basis point in and of itself is super hawkish, nor is it enough to push the economy back down to those very bottoms. Well, I'm just curious your guys' thoughts.
Not even close. Here's the problem: is at 2% interest rates, we're literally still in quantitative easing. And like I said, they didn't even run off the Treasury balance sheet. They did the mortgage a little bit, but not the Treasury. And if you look at the Tabor rules, the Tabor says that if you do the math on it, it says we have to have interest rates at 14% in order to get inflation down. 14%, we're at 2%. Like, we are so far away from true quantitative tightening, it's a joke. We are still in quantitative easing. And here's the major problem. There's two major problems we're facing right now. One, nobody in Congress is going to, quote unquote, rip the Band-Aid off until after elections, because doing so is going to be political suicide. So
Wait, Curry, bag that up, because you taking the words right out of my mouth. Okay, say that again about the political suicide.
I said, nobody in Congress. It would be political suicide to fix the economy, because fixing the economy requires short-term destroying the economy. We have to go into a major recession in order to get inflation down. And if we enter a major recession right before elections, who do you think people are going to blame for that? The people in power, the Democrats. There's no way that they're going to allow that to happen.
They will all get voted out, and bad economies kills presidential elections. Period. It just does.
Yeah.
Who's ever in power, it's worse. If who's ever in power, if there's a bad economy, then it kills it. As a matter of fact, this is the truth. If someone that is currently in power and it's about to go to the next, and they have something that's going to help the other team, they're not going to do it. It's political suicide. And if the House, if the hands are finna turn, and the ones that is turning to, and they could help pass a bill before it turns to them that will fix the economy, they won't do it. That's political suicide. They're going to wait till it turns into their hands, and then they're going to be the good guys and say, look at what we did for you guys. That's the truth of the matter. So you're dead on with that, Curry.
But we got a major problem brewing, though, that we've never had in the history of the United States.
The Fed, let me say this.
So you know the Tabor rules? The Tabor rules require us to be at 14% interest rates in order to get inflation down. But we literally cannot raise interest rates that high, because if we did, the U.S. government would not be able to pay their debts. For the first time in history, our debt exceeds our GDP. And by some calculations, if the interest rates were to rise above 7%, the federal government would not be able to pay its debts. So literally, the Fed cannot raise interest rates above 5 or 6% without causing the first ever default in the United States, which means we can't fix inflation.
Right. And I got news for you guys. The Fed can't do it by himself. He can't.
It can't.
The Fed cannot do it by himself. He doesn't have enough tools at this point. There was a period where he could, when he was doing the quantitative easing, where he should have reduced the quantitative easing. There was a time when he should have held back on the last 3 stimulus checks instead of putting gasoline on the fire. There was a time when he could. Now it's out of control. It's Frankenstein's monster right now. He built Frankenstein. Frankenstein, for those of you that are young, Frankenstein got off the table, broke the chains. Now Frankenstein is bigger than you. And so that's where we are right now.
Well, okay. So if what it sounds like to me is that we actually are having trouble, even though there is tons of problems in the economy. And you did a great job outlining a number of them, Stock Curry. There may not be any one impetus that we can see right now that would keep us from moving sideways. And then once we get a confirmation of peak inflation, really potentially take off. Now, I want you guys to disagree with me if you disagree with me. I'm asking myself, what would it take? I'm asking myself, what would it take for these markets to go low, to reach new lows? That's the question I've been asking myself. And if the market's forward looking, if I'm looking ahead, I see the potential over the next couple of months of inflation dropping. And if the rest of the smart money potentially sees the same thing, why wouldn't they be slowly taking positions in this environment in anticipation of that one good news that would push the markets much higher? Now, none of this should happen. We all agree that there's problems that need to be fixed that aren't going to get fixed, but are any one of those big enough to cause everything to go down and hit new lows moving in the next couple weeks?
Well, I'm going to say this. Actually, Curry and myself, our predictions are pretty close. I say the last 2 weeks of October, November, December, mainly November, December. You were about right there, right, Stock Curry?
Yeah.
We cannot have a rebound, Josh, with gas prices and food prices this high.
Well, oil's rolling over, Larry.
It is, but it's still high. And
can I say something about oil?
Go ahead, Curry. Go ahead, Curry.
Here's the thing about oil is there's still a lot of risk in the market. And we're not going to see the market go up until the risk is over. There's two major risks when it comes to oil. One is this coming winter. If the winter is especially bad in Europe, it's going to cause significant demand in oil and gas.
Yep.
And that's going to cause prices to go up again.
Mm-hmm.
There are some beliefs that Saudi Arabia is now maxed out on the oil production. In fact, the world as its own is maxed out on oil production right now.
Yep.
And with Russia, there is belief that they could reduce their oil production by 5 million barrels per day without disrupting their economy, since they're still able to sell to countries like China. Now, if Russia were to reduce their oil production by just 3 million barrels per day, oil prices are predicted to rise to $180 per barrel. And if Russia were to reduce their oil production by the full 5 million barrels per day, it is predicted that oil prices would rise to $380 per barrel. And with that kind of risk in the market, nobody is going to take a safe bet on the long side.
That's true. And I'll tell you this. In Germany right now, Josh, they are having rolling blackouts. They are storing up because they are trying to get through the winter. So they are storing up right now in Germany. That's how bad it is, right? The threat against oil has not come down. The risk has not come down. Though prices have, the risk of high oil has not come down. And that's the problem that we're dealing with. The geopolitical situation, I'll give you an answer. You said what could cause us to be green? The war ends.
Actually, my question, Larry, was what would cause us to make new lows? And I think that we might all agree that would be if oil began to spike back up, because that's the only, you could say, positive thing in the market that I think we're possibly hanging our hats on right now, is the potential that that could have an effect ultimately on putting peak inflation behind us. But I would agree with you, Stock Curry, that that it's an environment of risk, and that the fact that the oil could just as easily shoot back up would eliminate that potential for some of the positive things that could cause us. I think until that happens, I think we'll move sideways.
Okay. I'm going to disagree with Curry now. Shocking.
I'm going to disagree with Josh. Go
yes,
ahead.
there you go. We about to be some disagreeing brothers. So now, on your long-term prediction, I don't believe that the economy is going to be that bad like it was in the 70s because we have tools. We have a lot of things. Things are not going to get as bad as 2008 because we had that's when the bank tests, stress tests, and all of that. So there's been things that we've put in place, and we understand that we can look back and see how bad it is. And so I don't believe it's going to be that bad that long on your prediction. But if it does happen, this is what I want the audience to know. Let's say I'm wrong and Curry's 100% right. I want you guys to know there is money to be made through all of that. I want you to expand on that, Curry.
So, all right, now I'm going to disagree with both of you. This is great because I love it. Because
this is cool.
The cool thing is we can all disagree and we can all make money in our own ways. So there's a couple of things. First of all, to answer Josh's question, what could cause the market to go down? So obviously we already have high oil prices priced in. We already have inflation priced in. We already have rising interest rates priced in. What is not yet priced in is a recession. If we enter a major recession and we start getting massive unemployment and unemployment rates start to rise and we start getting a whole bunch more defaults on these auto loans and banks are leveraged 100 to 1 on auto loans, we are going to see the stock market continue to collapse. And like I said, it's not going to go straight down. It never does.
Right.
It will zigzag down. We'll have periods of bull markets, periods of bigger bear markets. It will zigzag down. But we will overall see the stock market continue to go down if we enter into any sort of major recession and unemployment rates start to rise. That's the one thing that is not yet priced in. And with all of the uncertainty this month, we've got the CPI data coming out on Wednesday. We've got the PPI data coming out on Thursday. We've got the Fed that is having their meeting at the end of the month on the last Tuesday and Wednesday. And then right after that, on July 28th, we have the Q2 GDP numbers coming out, which could tell us if we are or not officially in a recession. I think there is so much risk in the market this month alone that we could actually see new lows this month. Yes. So that answers Josh's question. Now to get back to Larry's point.
Let's stick a pin in there. That's why I'm not investing this month. Go ahead, Curry.
Oh, I'm heavily invested this month, and I have a ton of put options.
Yes. Oh, no, that's different. Okay, wait. So I'm glad you said that. I'm only doing put options, so I'm not buying stocks. So explain to those that are new. He's doing put options, meaning he's betting and I'm betting, just like I said when the whole Twitter deal first came up. I said, Elon is going to mess this up. If I were you, I would short it. But anyway, that was then. This is now. So he's betting that the market is going to go down for those of you that are new that don't understand what a put option is. But go ahead, Curry.
Yep, exactly. So getting back to the bank stress tests is another thing I was researching over the weekend, and I was shocked at what I found. The bank stress tests, they looked at commercial real estate. They looked at commercial real estate going down. Mm-hmm. They looked at corporate bonds and corporate loans going into default. They looked at inflation going up to 10%. And they looked at one other thing. I can't remember off the top of my head. But the biggest, most glaring thing that they did not include in the bank stress tests was anything on the consumer side. They did not look at residential real estate. They did not look at consumer auto loans. They did not look at consumer credit cards. They did not look at anything on the consumer side.
Oh, so it's like core CPI, huh?
Exactly. Now, I believe the reason the Fed left out the consumer side of the business is because the Fed knows that if they were to do another round of stimulus, if they were to go back to more quantitative easing, that consumers would go spend money again. You know, what we found is that the stimulus doesn't work real well for businesses, but it works excellent on the consumer side. You give consumers money, they will spend it. So I believe that the Fed thinks we don't need to worry about the consumer side, because if things get bad, we'll just go ahead and give consumers money and they'll go spend it and we'll be fine. What the problem with that is, the Fed's probably looking at residential mortgages and thinking we're good, and they're right. Completely overlooking and missing the entire auto loan CLO market. That's now twice as big as the residential mortgage market was in 2008. And man, they are completely missing the fact that these banks are leveraged 100 to 1. And if they go down, who cares if we give consumers money and help them out? The banks are still going to lose 100 times more on their extremely risky bets. So that's why I think the bank stress tests are an absolute joke. And they're just not doing anywhere well enough of a comparison to try to figure out what would really happen. Oh, the fourth thing was the stock market going down by 55%. That was the fourth thing that they looked at. And I just don't think that the Fed has come anywhere close to looking at what the actual risk of these banks are at this time, because they are missing the most riskiest investment the banks are making.
Yes.
So
hey, from the streets to Wall Streets. Hey, hold on, Josh. I'm going to make a love your name from the streets to Wall Streets. Love your name. Hey, I'm Josh. We're going to come right back to you. I'm going to take a station break. So that doesn't mean you guys log off. It simply means that in my description, number one, I want you guys to hit the like button. We got about just under 2,000 people, watching, and we need 2,000 likes. But in my description, okay, on your phone or on your if you're on your phone, hit the description, right, or on the computer. I have two links, which is Webull and Moomoo. Download them both. Just put $100 into both. I'm going to work with these two gentlemen, and we're going to help you get both of those platforms green, right? That's what we're going to do. We're going to discuss it. This is not going to be the first time we do this, but just as important, under those two links, I have a link for Stock Curry. I want everybody to go to his page and subscribe and hit the notification bell. Okay? Then I want you to go to Stocks with Josh. Let's just do that right now. Just open up another screen, go to Stocks with Josh, hit the subscribe button, flip it around, and then hit that notification bell. Okay? We want to support these two gentlemen. I'm going to support anybody that comes on and add value to your trading journey. We're going to continue to support them. Now, Josh, I want you to quickly answer your question, and then it's already been an hour. It's been so good. I gotta have you guys back.
Oh my goodness!
So we're going to talk about stocks as far as how we're trading going forward, and then we're gonna hit on crypto. Okay, so we're going to talk about stocks, and then we're going to hit on crypto. Josh, you go.
Well, okay. I just wanted to follow up with what Stock Curry had said a moment ago, that what could drive us lower was the obviously if oil did not stay down. But the other big factor that if I understood you, that you were saying was earnings. If the earnings began to come out poorly, and that would then lead to potentially the layoffs, So would you then say, now so far earnings have not all been poor by any means. There's been some companies that have killed it in recent days. So if the earnings come out mixed, now we already know we're in a recession. I would be shocked if we didn't have negative GDP for this for the report at the end of the month. But so we're not really meaning just being in a recession. We're really talking about layoffs, and we're talking about poor earnings. So I'm going to go back to my original premise. If the oil does not rise, okay, and the earnings come out mixed to moderate, is there anything? I mean, obviously, you mentioned, there's things like war, and there's things like a really bad winter. There's poor planning on Europe's part, but minusing some of those more extreme things, what do you see any reason why we would go down from here to make new lows? Did I
Those are
cover
the biggest reasons, right? The poor earnings, which the big problem we have right now is the street is expecting poor earnings, and analysts still have super high price targets, as if we're still in this massive bull market. Mm-hmm. So I think analyst ratings are going to start dropping to come more in line with the forward guidance from the companies. And, when analyst ratings drop, that usually triggers action by a lot of the large pension funds and other very large investors. So I think that could be the other thing that could bring us down.
Yeah. Hey, I'm going to do something I never do. And travel and van life, you made a comment. I'm going to say this about promoting crypto and stocks. And I'm gonna pin this comment up. It's something I never do because I want to keep it real. Okay. You guys see that, and I appreciate you being respectful. Okay, and I never go negative, but what I'm gonna say is positive. All right, and these gentlemen and my followers can back me up on this. And you probably came from that other page of these. These negative guys. I want to say this because I'm a big boy. I didn't promote crap stock. What I did was I showed my followers how to be first in, how to make their money, and how to get out. And that's exactly what we did. And I'm proud of that because I meet people every day that still have a lot of that money in the bank. But I also said last November and October, it was time to sell and it was time to take profits. And the ones that did still have most of their money. So I'm never going to either I go in, if I spot another, let's get right into, I'm going to switch it, guys. Let's say another Shiba Inu comes out. I'm going to have conversations nobody's don't want to have or brave enough to have. I'm going to tell you guys, and this is me, I don't speak for these gentlemen. I want you guys to leave me a comment in real time, family. If I see another Shiba Inu that comes up, let's say the next crypto bull run, right? And I know I'm early to the party, and I see that I can make 400%. Would you rather me just do that on my own and never bring it to the family and continue to make the money, which I did a lot. I made a lot of money. And I got out. Actually, it went up, 800%, Josh, that I cashed out of Shiba Inu? So would you guys rather me bring it to you guys and caution you guys, like I said, this is an extremely risky stock? Because I brought it early, remember? I brought it before even me, Kevin, did. And I also said that this is extremely risky. You want to get in and you want to get out. And then I also showed you how to do proper profit taking. So would you guys rather me not say anything and just be quietly make this money myself? That's not why I got into this. Or would you would you rather me be quiet? It's up to you to say, hey, this is risky. But when it got really, really high, I started begging people to take profits, and some people didn't. And so I want you guys to tell me what you want me to do, because that was my gift. I remember I found Shiba Inu. We rolled that up. I found 5 other stocks that we made 100%, and I went in heavy, right? Then I went to Mana. Remember? I went to Meta when Facebook changed their name to Meta. I went to Mana the next day, and it ran up 200%. After I told it was 93 cents, and it ran up to 450. Remember that, Josh? So,
I do.
I brought it to the family in real time. So I'm just telling you guys, I didn't go to a prestigious university. I came from the west side of Chicago, from the belly of the beast. I'm you guys. I had the credit score. Like he said, when I got to a 600 credit score, I thought I achieved Mount Everest. But I'm not going to make that kind of money and not let you guys know. I just can't do that. But in every video you will see, I was telling you guys that I would limit. Matter of fact, I said I would limit it to 5% max of my entire portfolio. Max. And I said, that's a lot. And I also said, never invest money in crypto or stocks that you cannot afford to lose or you're going to need. So I'm not going to apologize for that.
Yeah, I think a lot of people, Larry, are sort of licking their wounds from trades that maybe didn't go well, and sometimes people are looking for someone to potentially blame. But the thing that I kind of want to remind everybody, remind the retail investors, there are firms and very well educated gentlemen who've been working in this field for decades, who lost their companies hundreds and hundreds of millions of dollars. There are, Voyager is a great example of billions lost, and retail people's money. A lot of people made different mistakes. I followed you on your journey. I was aware of your trading. I was aware when you told people to buy and when you told them to sell. You and I were in a lot of those same trades. Yeah. I was aware of how much money you made,
yeah.
and you did really, really well. Probably, I would say maybe better than many people on Wall Street. But some people don't watch every video.
Right.
They might watch a video where you're talking about a stock to buy, and then later on, they didn't hear the video where you said, "Hey, I just sold mine." Right. And you can't repeat every play every day. So that's what comes to mind.
Yes.
Yeah. Last year, a lot of YouTubers were just talking about buy.
Right.
And there were very few of us. I mean, you, Larry, myself, and very, very few people that were actually telling people when to sell.
Yes.
And I remember when I started my VIP Discord, the number one question kept popping up, like, how do we sell? When do we sell? How do we know? And yeah, that was the major problem. Is, like you said, these are short-term trades. Take advantage of the hype. Get in, make your money, and get out. It's what King of Grace say, get in, get up, get out. And
right.
That's what very few of us were actually telling people that. And, sadly, a lot of people lost money. But like you said, Josh, sometimes you just miss that video
you know what, Curry?
When to sell.
I actually took flack in October. Remember when all of the earnings kept being high? They were knocking the ball out of the park, earnings after earnings, and the stock just went flat, and every next morning it went down. And I came on and I says, guys, the market is too frothy. There is a correction or recession coming. You should start taking profits. People were hating on me for saying it's time to take profits. They're going, no, we're in a bull market. Well, a lot of people got in the last 2 years, and that's great. But I made my first trade in 92. So you and I, Curry and Josh, we've seen these cycles. So we're like deer in the bushes, and we hear that tiger. We're like, hey, let's go, y'all. Right. And so that's what we try to bring to you guys. Like, the safest thing, and I always say this, you never need permission to take profits. Taking profits is like taking vitamins. It's good for you. Never apologize for taking profits. And there's never a wrong time to take profits. If you up 10%, you want to take profits, take profits. Go
Yeah,
ahead.
it's just
Hey,
a matter of people being new.
let's touch
You know,
briefly on crypto before we head
yeah.
out.
Yep.
Let's talk about crypto.
You know, I want to. I'd be curious your thoughts on crypto in general, Stock Curry. I can't say that I've spoken with you about it. Me and Larry talk about it almost every day. So, where's your? Are you what are you? How are you positioning yourself in crypto right now?
Well, last October I cashed out of everything along with Larry Jones. He and I both saw the same thing at the same time.
Yep.
And it's hard for people who are new, this is their first time getting in. They have no idea what's going on. They're just trying to watch YouTubers for any sort of help they can get. And obviously, we're here to help you guys as much as possible. Obviously, watching videos every day would help with that. When it comes to the crypto market, I see the crypto market as an extension of the stock market at this point. Whatever stock market does, cryptocurrency does it 2 times worse or 2 times better in a bull market. And so when it comes to crypto, I'm continue to have zero cryptocurrency on me. I have sold everything and I'm not buying back in right now. On Bitcoin, I do see very strong support at 12,500. And I think we're going to get down to 12,500 on Bitcoin. And I think every other cryptocurrency in the market is just going to follow Bitcoin at this point. I'm waiting for Bitcoin to get down to 12,500. And then at that point, I'm probably going to start buying back in. And I don't know if I'll buy Bitcoin. I'm probably going to end up buying other cryptocurrencies. But I think as Bitcoin goes up, other cryptocurrencies will go up as well. But I see the bottom at 12,500 in Bitcoin. And whatever Bitcoin is that, I see a bottom in the crypto market. It's just me personally. Could be dead wrong. It's just my guess.
Josh, you give yours, and then I'm going to give mine, and then we're going to end on Verb. This should be good. All right. So, Josh, you give yours.
Okay. Well, no. I think that my view on crypto, I want to take a broad view and then kind of narrow it down. Okay. We didn't really see the peak that a lot of people imagined that we would see. I mean, there was a lot of technical reason to have at least gotten us to 77,000 on Bitcoin. And so, that was sort of nerfed. The tops were nerfed. We made two pushes for it, which in of itself is a little bit unusual. We had our initial run up to 64, and then we had this great big pullback, and then we made another attempt and got stopped out at 69. And so, at that point, there was a lot of really good logic in play to why we would, the entire time we came off of 69, there was a lot of really good logic in play to suggest that we would go back up and hit that 77 and get a little bit higher technically before we actually could go into bear winter. That's why a lot of people just had a hard time believing that we were going to go into bear winter because it just technically didn't get to where it needed to be. And so I would like to apply that to where we're at right now on the low end. Okay, so let's say we didn't quite get the bullish top, blow off top that we needed. And I'm going to suggest that it is just as likely that we will not get that capitulation bottom that everybody wants. The market never does what you expect. It always does, the opposite of what the masses are imagining, and it also does whatever's going to hurt the most people. All right. And so it makes a lot of sense to me that Bitcoin would go and break below 17,000 from a technical perspective. One of the biggest indicators is that at every other bear run, Bitcoin has gotten below 80%. It's gone below at least, there's not an average, there is an average, but there's not a specific percentage down that it comes each bull run, but it definitely goes further down than it's gone right now. And so there is a lot of reason to believe that we could get down to that spot. But having said that, not having gotten that parabolic blow off top, it gives me the perspective that we may not get that capitulation bottom. And I want to draw out a point because I got a comment in one of my videos today. A guy asked me about Compound. He's like, Josh, I've been following Compound. Is it a good time to buy? And, I made the comment to him. I was like, well, if you've been following Compound, and I asked him, do you own any? And I'm like, and he doesn't own any. I said, if you've been following Compound, you like the project, and Compound is 94% down from its all-time high. Okay. So yes, cryptos can go 95 and even 97, 98, 99% down. But I said to him, I said, if you've been following this, this is a project that you're interested in. It's 94% off the bottom. And I said, it makes sense if you're ever going to buy this, to buy it now. But that I want to qualify with the point that whenever we're talking to the retail audience about investing, there's always the question, are we talking about lump sum investing? Are we talking about averaging in? No, I wouldn't. I'm not lump sum investing on anything. I have I would say that, men like the three of us have lump sums to invest, but I am absolutely dollar cost averaging in projects that I would love to have bigger positions in, and I have no reason to not start doing that. I gave everybody my top 10 cryptos that I believe will survive the bear winter. And if you're going to accumulate now, could you time the bottom? Could Bitcoin 12,000 be the bottom, and then everything else will be in that perfect price zone? Yes, but the average investor isn't sitting on the sideline with thousands of dollars to employ. They're pulling money weekly out of their paycheck. I can tell you a lot of, I've got children and I've got young folks that I'm mentoring in money, and I'm always challenging them to say, hey man, get decisive on your finances. You can afford to put in $25 a week. I've had that conversation at least twice in the last couple of weeks, talking to people saying, come on, man, you can afford to put $25 to work. Now, if all you're doing is putting $25 a week to work, or maybe 50, or maybe under 100 a week, then you're running out of time to invest, in my perspective.
Yeah. So let me,
that's my view.
That's a good perspective, Josh. And we all have different perspectives. I'm going to answer this question, right? And I'm going to answer this question. Larry, tell us about fails. I'm going to answer this because it actually talks about what we're talking about. I'm going to answer this in stocks and crypto, and these gentlemen will back me up in this one. If you're new to the stock market and crypto, which a lot of you guys are in the last 2 years, right? There is this misconception that you win all of the time, and that's not true. If you have $500 and you invest that $500 into 5 different stocks, and two of those fail horribly, but you make money in the 3, right? But you made more money by investing in the overall, let's call it portfolio, then you won. That's what investing is. It's not about getting it all right, okay? So if you lose on the 2 and the 3, you make 50% a piece on the 3, then you've won. You've made more money than you lost. Follow? For those of you that are new, right, Curry? That's what investing is about, because none of us have got it all right. I've lost a lot of money, but I've made way more money than I have lost, right? And so I don't want you to be mono-focused on your losses if your gains are greater, because that's part of the process, right? And so what I want to say about crypto, this is where I think crypto is going. There's no way we're going to be in a crypto bull market and in a recession at the same time. That's just me. It's not going to happen. You look at the NASDAQ and you look at Bitcoin and you see the correlation. It's just not going to happen, right? And so what I was doing is, and I called flack for this, but people are starting to see, when Bitcoin, I converted a couple of my Bitcoin over to stable, right? Remember, Josh, right?
Yep.
So for instance, if you take, let's say Bitcoin is at $30,000, right? And you convert one Bitcoin over to USDC, right? And Bitcoin falls to 15,000, and you take that money and convert it back into Bitcoin. Now you have 2 Bitcoin. Am I doing my math correct? And so The thing with investing is there is no one way. There is not just one way to make money. You have to do what's best for you. I just try to shine a light and show you guys more ways to make money and to invest. Here's what I think is going to happen in crypto. I believe that just like the stock market is going to have a bump, crypto is going to have a bump. And crypto's bump is going to be bigger than the stocks, right? This is what I believe. I'm not speaking for these gentlemen, right? People will rush back into crypto, which is going to push crypto even higher. What Larry is going to do at that point is Larry is going to either cash out or convert, because the true crypto winter, I believe, will come next year. I believe I believe that it'll be lower than it is now. That's just what I believe. But I believe that there'll be a fake pump before then, right? And that's what I believe. And then I'm going to accumulate all through crypto winter. I'm going to dollar cost average all through crypto winter. And I'm going to do the same thing with stock. Anybody
Mine
have
is
a comment?
easy. My follow-up is very easy.
Mm-hmm.
I believe that the $20,000 range for Bitcoin, which the highest Bitcoin holders, the largest whales, have been buying consistently in the $20,000 range. I
Mm-hmm.
believe that that is a very good average for the retail investors to be acquiring. I also, like you, Larry, believe that we're going to see a run up and maybe even a fake pump.
Mm-hmm.
I'm actually believing that it's possible that it could go as high as 38,000. That's been my personal estimation, that it could go up with these markets, but that we would ultimately still be in the bear winter and pull back to that 20,000 range. I think that there is going to be very few days under 20,000. I think it's absolutely possible, like Stock Curry's saying, we can have absolutely days of capitulation that take us under 20. But I would say if the retail investors see that Bitcoin is at 20,000 and they're not lump sum investors, they're not picking up full Bitcoins, they need to be putting in money. I would tell you that I strongly encourage my own children and a lot of the young people that I mentor to be putting that weekly investment in. If you see Bitcoin at 20K, don't try to time that. Don't try to get the 12 or the 15K. Know that you're not buying the top. Know that
Right.
you're 90% off of the
Yes.
bottom.
Yes.
And it's time for you to be acquiring.
At some point, I don't care how much Bitcoin is if I'm long term. That's to Josh's point, because you're not going to guess where the bottom is. But I do know that if you buy Bitcoin at 14,000, right, Curry, if you sit around 12,000, right? If you buy Bitcoin at 12,000, you don't. I could care less if it goes to 1,000. I could care less if it goes to 500. If I buy it, you understand what I'm saying? Because I'm holding it for long term. I could care less about the volatility when I bought one at 30,000 and 50,000. So if I buy one at 20,000 and I'm dollar cost averaging and I know I'm going to be holding this past the next bull run, if you look at how Bitcoin comes, how especially the blow off tops, if you look at the cycles, and especially we know we have a halving coming, if you look at the cycles and you're long term, you don't sweat. Yeah.
Yeah, I just want to give a little bit of encouragement to everybody who's new to investing, because your very first bear market can be extremely devastating and extremely difficult to navigate through. So I just want to give a little bit of encouragement here. First thing I want to say is the job that I had right before I came on here to do YouTube, I was working in an algo trading company, and that just means that you're programming computers to do trading for you. And what we realized in programming those computers is that so long as the algorithm was correct 60% of the time, it would make money and beat the market. So long as that algorithm was correct 63% of the time, we averaged a 30% annual return.
Yes.
So don't get worried about getting 35 or 40% of your trades wrong.
Right.
You only have to be correct 60% of the time to beat the market,
Yes.
to beat the 8% annualized return.
Yes.
So that's the first thing I want to say to really encourage anybody that's new to
I
this.
like it.
The second thing I want to say to really encourage everybody is, while the bear market is very long and can be extremely discouraging, flip that around and get your mindset on being extremely encouraged in the
Yes.
fact that you are actually investing right now. Because if you go back and you look at a year ago, how many of you, just ask yourself a question, when Ethereum was at $4,000 a coin, you would have died. You would have given anything
Yes.
to buy Ethereum at 1,000. And now you have the opportunity to do so. This recession, this bear market, is the biggest blessing you will have for the next
Absolutely.
10 years.
Listen.
These recessions, these bear markets
Yes.
only happen once every 10 years. You are not going to get an opportunity like this to buy stocks and crypto at these extremely undervalued prices for another 10 years.
Yep.
This is the greatest opportunity this decade. And I want to encourage you to get excited, to love what's happening right now, because you in the next 10 years are going to make an insane amount of money if you invest now and you continue to invest as the market goes down. All three of us have a Moomoo challenge that we are starting.
So
And
let me talk about that.
I can't speak to the other people's Moomoo challenges. For me personally, I'm calling it the Moomoo Millionaire Club Challenge. And it's a challenge to help all of us get into the Millionaire Club.
Yes.
And it's real simple. In my challenge, I'm going to be doing value investing in my challenge. I am using the same strategy that John Templeton, Warren Buffett, and so many others used to become billionaires in the stock market. Now, I'm not going for $1 billion. I'm just going for $1 million. But I'm going to use the same strategy that they used. And the strategy is extremely simple. We are buying undervalued stocks and crypto. We're going to wait until they get up to fair value and then sell them. And the people in the past who have done this, they made all of their money in recessions. And during recessions, they saw 500 to 700% returns in just 4 years.
Yes.
Coming out of a recession.
Yep.
This is the greatest opportunity you're going to have for the next 10 years. Take advantage of it and get excited.
So now, anybody that's been watching me for any period of time, that is my core message. Out of the swing trades, the day trades, when we were killing it in 2020 and 2021, I've been consistent about this is chump change compared to the money you're going to make by investing long term. And this is the core of what I've been trying, the message that I'm trying to get out there. I'm going to say that thank you everyone that gave a super chat. I really appreciate it. But this is what I want to say. I'm doing the same thing from Warren Buffett and Joshua from the Bible. If you read that story, it will blow your mind. He was a value investor in a time of recession. In the Bible, they call it famine. Read it. I'm telling you, it will blow your mind. But I'm doing the same thing because I know. Look at this. I'm going to go. Let me do this right quick, and then we're going to end this. All right. So look at this, good people. Boom. Look at this. Look at this. here. You see that? Can you guys see that? On Bitcoin. While people are running, some are running scared, but if you look at the trading activity, 95% buy, look at this, 5% sell, right? Now, that doesn't mean run and stop buying Bitcoin right now, but somebody out there, a lot of somebody's out there, they're saying, you know what? I believe in cryptocurrencies long term, so I'm going to start to accumulate. And that's all you have to do. If you don't know where the bottom is, the best thing to do is the dollar cost average. But be willing to do something long term, like he said. If you find companies with low PEs that have future earnings, and that's another thing we'll talk about in another video about forward guidance and how they should have been lowered already. But we'll talk about that on another one. And so if you guys that are listening to us, right, if you just, and we're going to help you. I'm going to challenge both of these guys right now in front of you guys. Give me a minute. If we are going to help you set up long term, because that takes more temperament than it does smarts. It really does. You don't have to be a genius to be a long term value investor. Like Warren Buffett said, you just need temperament. So what I want to put out to you, gentlemen, is this, is let us come together and let's find about 5 to 6 value stock. Okay, let's find about 5 or 6 value stock and let's help the people. What do you guys think about that, and how can we do it? I know what time it is. Oh yeah, and we gotta close out with verb. So we can get together and talk about that. And I want you guys are there you go. Yes. You guys see that? Oh, I hit the wrong one. Yeah, but that is, yep. You guys see. Exactly. And so Curry and Josh, I'm charging you guys for us to come together, and not necessarily as a competition, but for us all of us to look at about 5 good value stock and chop it up. And over the next few weeks or months, let's start giving the people some value stock that we see and show them the research so they can research for themselves. But they have to understand that it's only a value right now because we're in a bear market. So the PE is low. And then when it gets up, then if they want to take profit, they can. But the method right now is to hold that stock for a long time. What do you have to say to that challenge, Curry?
Absolutely. That's exactly what I'm going to be doing in my Moomoo Millionaire Club challenge. Is We're going to be putting stocks in there that we're going to hold until they get up to fair value. And they're all going to be extremely undervalued stocks right now.
Right.
I found quite a few stocks with PEs of 2 and 3.
Okay. So let's do it in a way where we come back together. All right. So you do it there, and we're going to go to your page and we're going to watch your challenge from your page. Right. And then we're going to watch Josh's challenge from his page. Right. And then we're going to watch my challenge from my page. And then we're going to come together and talk about our collective stocks. Right. And then we'll have a powwow and a party at the end. What do you guys think about that?
I think that's great. I'd love to do it. I've got my picks. I've got my picks already. So let's make it happen.
All right. Well, Curry, why don't you you want to host the next one?
Yeah, I will definitely host the next one. I'd love to have you guys on my channel, and let's do it. We'll talk about our undervalued stocks next time. And I think that would be excellent for all the people
to
see all of that. And it's kind of like the last time you did something like this. I remember we all had different stocks, but the
Yes.
beautiful thing about it was, it was great to see that sort of diversification and the difference there, where we were all able to come together, pick our different stocks, and then
Yes.
it gives people different ideas. On
Absolutely.
everything on this channel and your channel and Josh's channel, we're not telling anybody what to buy or sell. We're just mostly telling people what we're doing, and then they can go do their own research and figure out what they want to buy. But I think it'll be great to give people more diversification and to see the different ways in which we pick these value stocks.
Okay. Cool. Cool.
I
I
love the
think this.
idea, Larry.
Yes.
I love the idea, and I think that when we get together, I would sincerely uh, love that we know each of each other's picks, and we
Yes.
come in with, we either say, "Hey, I love Stock Curry's pick so much, I've added it to my portfolio,"
Absolutely. That's what
or
I'm talking about.
and I welcome him to say, "Hey, Josh needs to drop that one right away." So this is going to be great.
That's what I'm talking about. That's what I'm cool. So hey, let's end with verb right away. And we wanted to go short, but we're going long. All right. Let's end with verb. Which one of
Well,
you guys want to start?
I can introduce it. Yeah. So
Yes.
I
Tell
don't know if
them,
you were even
Josh.
aware of
1 second,
this.
Josh. In 2 minutes, tell them how it's performed, and then get to what you're going to get to.
Well, it's actually been performing positively, from a purely technical perspective. This has been the stock that I chose. It is a risky penny stock on the Nasdaq, that has yet to turn a profit, and so there are definitely all of those elements in it. But it also has a huge potential to the upside. We were able to buy in very conservatively. The majority of people that own the shares of it from the time we started our challenge is below 46 cents. Most of them have it around the 35 to 42 cent range. And so everybody is up, and 30%, and some of them are up 100% right now. And we've been talking recently about where to take profits and where to buy back in. This came up on Stock Curry's purview one day when he was doing a live, and somebody asked him about it, and he said, "Man, this company's a horrible stock. It's these folks are going bankrupt. You guys should be shorting it to zero." And then everybody came over to my page and they asked me about that. But what I had said to them is that they had they had an $11 million capital raise in April, and so that isn't reflected in their balance sheet at the moment. And so they're not in the state. There's a little bit more involved to it than I guess than was communicated in that particular moment on that live. But go ahead, Stock Curry. What are your thoughts?
I'm gonna stick by what I've said before. Long term, I see it as a zombie stock, but I can't deny the technicals on this thing are extremely bullish. There is no doubt about that. This is one super bullish stock from a technical standpoint. So as a technical trade, I think you guys did an amazing job finding the stock and buying it. As a long-term hold, I personally wouldn't touch it, but that's what makes it so great. We can all disagree. We can all have different stocks we trade in and out of. And I really appreciate the fact that you're talking with the people that got into this trade with you for taking profits.
Right.
I think that's the biggest thing that a lot of new investors have to learn how to do.
Yes.
They've got to learn how to take profits.
Yes.
And realize that they've got to stop listening to these people that say, buy the stock, it's going to the moon, and don't sell it till you've made 10,000%.
Right.
For those of you, let's get back to reality here.
Yeah.
And listen to the people like Larry and Josh and myself and take profits when we find those opportunities to make money and take profits.
Yep. As a matter of fact, the rule of thumb for taking profits for those of you that don't know the textbook rule, it's actually 20 to 25%. It's not 100, 200, 300% because we just came off of a bull market. That's what it really is. 20 to 25%. And the facts show that if you take profits more often at that rate, you're going to actually come out with more money, because there's going to be more stock that go down than go up when you don't do proper profit taking. I understand in a bull market it changes. Trust me, I adjusted with the bull market, but that's not the reality. So if you're blessed to make 20 to 25%, that's just the proper way to look at taking profits, okay? So let me talk about a trailing stop loss, good people, and how I use it, especially on this verb challenge, if you don't mind me adding to your verb challenge, Josh.
Go ahead, Larry.
Okay, so now, for those of you that are on stop losses, right? So you have a hard stop loss and you have a trailing stop loss. So this is how I use a trailing stop loss, and everybody uses it differently, okay? So on a regular hard stop loss, if you set a stop price and that stock, this is the stock, and this is your stop loss. If you set that stop loss and it falls below, it triggers and it sells your stock, right? But in the case that you have a stock that's a heater that is running really high or really fast, and let's say you're up 100, let's say you're up, how much are you guys up on Verb?
80% of the group is close to 60% up.
Oh, that's great.
30% are already over 100%.
Oh, wow. So you guys are killing it with the Verb challenge, right?
Yeah, and everyone's been informed to put their stop loss in at their price of entry, and for the majority, the high end of that would be 46 cents. So almost everybody's in profit. There's a couple stragglers that got into it late and didn't quite hear the instructions. I did a poll. There's about 10% who own it around the 50-cent range, but yeah, we're all in profit. Great. And they've all been instructed to take, put in a stop limit, and we're probably going to swing trade this stock a couple times here.
Yeah. Yes, this chart is on Webull. Hey, listen, but now, Josh, let me help other people that don't know about a trailing stop loss. I use trailing stop losses, and remember, everybody use their tools different. I use trailing stop losses when I'm in profit, and here's why. If I'm up 80%, right? So this is a trailing stop loss, not a regular stop loss. For those of you that are new. So let's say I set a trailing stop loss at 10%, right? Right? So 10%. Here's your stock, and this is the 10% range of your trailing stop loss, right? If that stock keeps going up like Verb has the potential to do, then that stop loss never gets triggered. And you could continue to make profit as long as it stay in that 10% range, right? So that's why I use it a lot when I'm in profit. But if it turns around and falls by 10%, then it sells, right? But if it's a very volatile stock, then you don't set it to 10%. You could set it to 20% if it has these mood swings, right? And so that's why I use a trailing stop loss when I'm in profit, because if the stock keeps running, I keep making more money. But if it turns around and trips the stop loss, then I'm in profit. I can't lose because I'm already 80% up. The most I could lose is 10% because I set my trailing stop loss at 10%. Follow? And so that's why I use it.
Very good explanation.
Thank you. That's why I use it when I'm in profit. So for instance, there was a time I was up 50% in a stock, and I put a trailing stop loss on it. It was a popular stock. And then I thought it looked like the technicals were showing that it was going to reverse. But what happens was a whale dumped a big sum of money in, and it started to run up again. I made another 30% on top of that 50%, right? But here's what happens. When I see that it is about to turn around, you could go in, and I call it squeezing the trailing stop loss. So I went from 10% to 5%. Because it kept me more gains. And then it turned around and went down and it triggered. So all I lost was 5% out of my 80% gain. So I still gained 75%. So there's different ways to use these tools. I absolutely love the trailing stop loss. Josh, I was going to make a video and put it on your page, but why not teach it now? All right. Hey, we're gonna call it right there. This is we said 45 minutes, but man, we got a lot to talk about. We will come back. Stock Curry will be hosting the next one. We're gonna talk about the market, but I think it'll be better served if we talk a little more about stuff like this, right? And we'll give more time to stuff like this that's going to just help you guys. This is a free class that you guys are getting, okay? We all have things that we are doing. I'm going to say that I am working on an ultimate beginners class, which both of these gentlemen will be participating in, right? I don't know when it's going to be finished, but I'm making it as basic, as basic, as basic. My theory is talk to me like I'm 3, okay? Josh will be doing a Discord, and Stock Curry has his VIP class. Now, if you want to learn how to short the market or do put options, I suggest that I think you're sold out right now, but you're going to open some more up, Curry?
Correct. Yeah, we're sold out right now. I've got to hire some more coaches to help people out. And once we get them onboarded, I'll reopen registrations.
Okay, and so we're going to help you guys through everything with the free stuff. We're going to help you guys make money and make sense of it all. But I encourage each and every one of you, if you ever thought about getting out of the market, right now is the polar opposite worst time to be getting out of the market. Just think about this in closing. If you had a truckload of cash and you were just getting into the market, you've hit jackpot, because there's more upside long term than there is downside long term. And so, and especially if you get in and start dollar cost averaging and you are investing. We're not talking about trading, we're talking about investing. Hey, I'm gonna leave it right there. Both of you guys say your final words.
Well, hey, I'm just glad to have the opportunity to chat with both of you guys today. And, I don't really have anything more to add. I'm looking forward to sharing stock ideas with you guys the next time we do this.
All righty.
And
Curry?
I would say that if you've ever wanted to win the lottery, all you got to do is invest in the stock market right now, and you've got it, because this is an incredible opportunity to make a ton of money.
Yes.
If you are patient
Yes.
and you're willing to hold for another 4 or 5 years. That's what I would say. And I look forward to having both of you guys on my channel next week. I cannot wait to host you guys. It is going to be an incredible time where we can help everybody just make so much more money. And really, I just hope everybody continues to profit. I hope if you've learned anything from today, it's that there are so many different ways to make money in this market, and each of us is going to help you do that in our own unique way with our own unique special talents and skills that each one of us has built up. And I think all of us have been investing in the stock market for over 20 years. Each of us have. So you are getting an incredible amount of experience by following and watching each and every one of us. And the fact that each of us disagree on different points just points to the fact that you've really got to subscribe to all 3 channels and watch all 3 channels to get the whole picture of what's really going on and figure out your best investing style that works for you. So I love it. I'm so glad you guys all joined us. Please don't forget to hit the like button and subscribe. And I look forward to hosting you guys at some point in the future.
Yes. Before you guys go, people are still asking for you guys links. Let me show you guys this. Listen, just go to YouTube. You see the video, right? And I know some of you guys don't know how to navigate. That's cool. Listen, all you have to do is just go down and you see, here's the link for Webull and here's the link for Moomoo. Download those so you can participate. But here is Stock Curry's link and here is Stock Josh's link right here, good people. I want you to go to their respective pages, both of them, and do yourself a favor and subscribe to both of them, because I'm telling you, you have a wealth of knowledge in both of these guys, right? And I love these brothers, and I'm going to be bringing you anything and anybody I can that I think will add value to your investment journeys. Okay, I love seeing you guys on the streets every day, and with good news, man. All right, hey, we're gonna end it right there. Next time it's on you, Curry, and we'll talk to you guys later. All right. Live, love,
Thank
laugh,
you
and
both.
learn. We love you guys. Peace out.
Bye-bye.